moving in the right
I
direction.
think we're past that part of the negotiation, if that's what you call this process.
Also calling them trade deals, right? They're blueprints, they're a term sheet, whatever you want to call them. We know they're not firm deals ready to go now. That doesn't happen doesn't happen even in 90 days, which is where we are with China. Right? We've really just kicked the can down the road 90 days and said, hey, we'll negotiate. We'll reduce tariffs somewhere around 30%, and they reduced their tariffs on us to somewhere around 10%. Pretty good for them, but it depends what view you take. If you're the administration and you like tariffs, 30% is considered low. Right before the negotiation last weekend started, Trump said, I'd like to see it at 80, but it's up to Bessent. And throwing Bessent in this, where he's a free trade guy who has to pretend he likes tariffs for the job, it's just kind of fun to watch. All right, another item. What do companies do this quarter? I think it's worth spending some time there. Do they just throw out the quarter? It also introduced kind of a fun thing for management. You have two options. You're watching your stock get killed if you pull your quarter, you pull your guidance.
Right.
Or you say, let's run it, we'll keep our guidance. And if we struggle through the quarter, we can kick the can down the road then and have a sell for missing our numbers. But we were surprised. A lot of people kept their numbers.
Yeah. I think Wall Street was expecting that they were going to pull guidance, and they didn't. For probably the game theory that you're talking about, well, why do that? Well, if we pull the guidance, we get crushed on our stock price, so let's just not pull it. And if we miss guidance, well, there's an obvious excuse that we have.
Yeah. And why don't you spend a minute on some earnings, because this is what really is going to matter in the long run, is how do those companies do? And we can look at it. We already were able to preview the financial earnings because they report really quickly last month, and we liked them. Strong growth, above expectations. All the financials in our portfolio were doing really well. It's really the big tech numbers that came out recently that helped markets. And overall, the S&P 500 circle, they're squared off in green. The 13.4% growth rate, when at the beginning of earnings season in March, was only expected to be around 7%. So strong earnings beats, above expectations, and just pulling off a few of the big names that you'd expect. Apple, obviously, they struggled. Not a lot was expected out of Apple. They have so much Chinese business and supply chains there. Microsoft and Meta, great quarters. Responded really well. They had good re-acceleration of the growth metrics that people really care about. A lot of people with Microsoft were surprised at the big move. But if you follow them closely, they have their cloud number. If they miss that by even a small margin, the stock gets killed. So seeing them to get re-acceleration of growth and have a good number, it's not a surprise that was supportive of prices. And the other two big tech names, Amazon and Alphabet, kind of boring quarters. Really nothing really to see there. And all that together, that's pretty supportive for earnings.